pretty boring Monday.
Order filled.
Generally, Mondays are full of action, big moves, surprises, hurts. Mostly hurts for the retail. As you know, the market is trying to price in 2 days or sometimes 3 days worth of news events. And the volume could be huge at the open. Mondays are always trickier, but turned out to be a very normal, and expected kind of a session.
Order filled.
No surprises. No surprise, especially towards the downside. We all expected market to continue to grind up. Especially that 17,600. I think many of you did expect it to come into play, and once we captured it, and again I talk about it on so many occasions, guys. If you don't connect the dots, here's the practical example. You have the previous high, market pull back, makes a run for that previous high, pokes above it, hits the important number 17,600, consolidates just underneath that big round number 17,600. You saw many of you were shorting, I was taking long. So it is nothing but a consolidation under a big round number like 17,600. It's always a sign of strength. People look at it like a bull flag. They have market making a big up move, and then this flag pattern or consolidation, it is just a very bullish pattern which generally tends to break towards the upside. And again, right, in my terms, market makes a run for a big important round number 17,600, uses that 20-point range, which is always important, 20 points below that number into 80s, dips here couple of times, rotates, gathers more energy, more momentum, more open interest, more buy and sell orders, and eventually breaks out. So consolidation under a big round number is a sign of strength, and eventually we are seeing a breakout into 25 now. So I hope everything which I talk about, all the concepts, sometimes like the breakout and the orders flowing, big orders coming only at the breakout time, and this kind of a theory, right, how the market functions, why I would not short that. It's a bit risky. I would short, but I prefer shorting in this kind of a zone, guys. I know it sounds crazy to you, but as you develop more experience, skills in the market, you will know, right, what I'm talking about. As market breaks important level toward the downside, shorting here is more easier and profitable than trying to short when the market is making that kind of a move against you. You could be stuck in a short for very, very long time, versus when the volatility is already in. And I think someone mentioned about no volatility. I think it was Ultimate Hellraiser, who wants the dip but also wants big candles to form when the dip happens. A small candle dip is generally gets bought up like that. So when your candles moving big, those are the kind of things we should look for, especially in this kind of environment. When the pullback happens, if the pullback are happening on the big size candles like that, you want to avoid that upside during those times. Until the market settles, candle starts becoming smaller and smaller, more consolidation happening, more weight before you punch your long or short. Those are the sign, right? Market is in that mode where it is just gathering energy to continue to push higher. Other thing you can watch is the volume. I generally flip between various time frames. That's why I keep the volume disabled. But you can keep the volume indicator on. It is another sign when on a higher volume you want to be aware that the volatility is high. And on the lower volume, the path of least resistance is towards the upside. So when you see volume dropping in the market, price slowly lifting up in that direction, blue looks little out of place, so let's change the color of volume candles to yellow or something to match with the overall theme now. got 20 points on that pop, got a few runners left but trailing. Good job Mikey, congratulations. Congratulations Ijaz for passing. Ijaz, did you make any payouts? You many times appear in our chat. You tend to perform very well during the evaluation. Did you receive any payouts recently from Apex or any other platforms? Because we know you are an aggressive trader, especially around the non-farm payrolls or CPI reports. You pass bigger accounts, 150k, 300ks. But did you make any payouts after that? Because the psychology works very different when you are trading for a payout versus trading to pass in one day or to reach a profit target in evaluation. The skills or the temperament needed is much different. So just wanted to understand, have you been able to conquer that side of things where you trade not that aggressively but still trade well to make it to the payout stages in your PA account? Because that is what you should use for the judgment, passing evaluations and doing good on the CPI PPI report in the evaluation is fine, but when it comes to PA account or trading your personal money and then doing that kind of volatility based trading, it is a very different so make a note of that thing guys, which I just mentioned. It's okay, even I have made many 6k 8k 10k 12k days in a day, but evaluation really does not mean anything unless you are doing it in a PA account or a personal funded account. That is a totally different ball game. It's not easy to replicate that kind of a performance in the PA account. Yeah, chipping away $100, $500, $600 is the right way, but going big, home run in the PA accounts or the personal funded account, it's not a you don't have a good start if you are thinking that approach. Yeah, base hit, not home runs. That's the approach which is going to be long lasting. That's the approach which will bring you payouts consistently. Again, you can still make a big home run and make 1 or 2 payouts, but as I keep mentioning, right, if you have to put a track record for yourself, where you don't miss a payout even a single month. I missed only one payout in last 12 months here, and the story, right? I have went over that story again and again. I know it's very repeating, very irritating for some people, but it is need to be reminded over and over again. It needs to be reminded to me over and over again. What happens when you go super aggressive? It is possible to achieve aggressive trading results, but they are not sustainable. You will not be able to repeat consistently. Consistency will only come when you trade small across a couple of accounts, keep rotating, and then you will see the big results. I hope I extrapolate this result this year or by next year. Then again I have more meat or more weightage to what I talk about. but don't think like you will be, I'm not saying it in a bad way. I'm just saying it in the as per my experience. Yeah, having a conservative or fearful approach is a good approach actually. Having an angry approach or trying to prove something is not a good approach in the market. Being fearful, being conservative, being cautious is it's a foolproof approach. To be honest, it sounds crazy, I know. How can you be not confident and very conservative and still make consistent money? Because in that approach, in that kind of a mindset, you are thinking of downside, you are thinking of protecting your capital, you are thinking about missing a payout if you do this wrong. You are more you're more aware that way, versus you're only aiming 20,000 day, 5,000 day, 20,000. I have had many such days, right? I have shown in my Discord also on live streams. I have had 20,000 gain in my P account kind of days in the past, but they are not sustainable. They when the losses come and you blow the account, they hurt you very badly. Yeah, we were doing that not long ago, right? Anyway, it's on my other computer.